All right, let's talk about Chime. It's a company that millions of us see and use every single day. But how it really works? Well, that's one of the most interesting stories in modern finance. So we're going to deconstruct this fintech giant piece by piece.
You've seen this logo, right? It's on debit cards, it's on apps, it's pretty much everywhere. It all looks and feels just like a bank. Simple, modern, straightforward. But here's the central puzzle we're going to solve today. Chime is not a bank. So what on earth is it?
To really get Chime, we have to start where everybody else does, with the powerful, simple promise that got millions of people to sign up. Think of this as the very first layer of the onion, the part that everyone sees.
Chime's whole pitch is basically helpful, easy, and free. And they deliver on that by getting rid of all the stuff people hate about old-school banks, like monthly fees or freaking out about minimum balances. Then they add in these amazing safety net features like Spot Me, which is basically fee-free overdraft, and My Pay that lets you get your paycheck a couple of days early. It's all designed to feel like it's on your side.
And believe me, these features are not just some little gimmick. They operate at a massive, massive scale. Just take Spot Me, for example. Chime has fronted its members over $30 billion to cover purchases when they were running low. That is a staggering number. It just goes to show you how vital this one feature is in their users' everyday lives.
So this is the really crucial part, understanding who this is all for. Chime isn't going after Wall Street traders. Nope, they are laser-focused on everyday people, specifically folks who are most likely to get hit with those awful fees at a traditional bank. For someone in that situation, avoiding a $35 overdraft fee isn't just a nice little perk, it can be an absolute lifeline.
Okay, so we know what users see, and we know why they love it. Now it's time to peel back that first layer and find out what Chime's true identity really is.
And there it is, plain and simple. Chime does not have a banking charter. Legally speaking, it is not a bank. Which means if you use Chime, your money isn't actually held by Chime. Now that might sound a little weird, but it's the absolute foundation of their entire business model.
So you're probably asking, how can they offer all these banking services then? Well, they use something called the partner bank model. It works like this. Chime, the tech company, builds the awesome app you use, the slick interface, the cool features, but way in the background, a real licensed FDIC-insured bank, like the Bancorp Bank or Stride Bank, is doing the actual banking. Chime is the face of the operation, the partner bank is the regulatory backbone. This is so cool because it shows you the whole payment system in action. Every time you swipe your Chime card, it's not just one company doing the work. It kicks off a chain reaction. It starts with you in the Chime app. Then it hits the partner bank that issued the card. From there, it travels on the rails of a network like Visa, and the whole thing is powered by a super important behind-the-scenes engine called an issuer processor.
We've seen the business structure, but now let's go even deeper. Let's pop the hood and look at the actual technology that makes this whole complex payment system tick.
So I mentioned that engine, the issuer processor. What is that exactly? Well, think of it like the air traffic controller for your money. When you tap your card to buy a coffee, the issuer processor is the one that gets the request. Instantly checks if you have the funds, gives the coffee shop a thumbs up or thumbs down, and then makes sure the money gets from point A to point B. It's totally invisible to us, but absolutely critical.
And we actually know who Chime uses for this critical job, a company called Galileo. Now, this quote looks super technical, right? But what it's really showing us is just how deeply these two companies are connected. Chime gets these raw data files directly from Galileo, detailing every single transaction. It's the digital handshake that connects Chime's beautiful app to the massive global payment system.
So how does Chime manage millions of these transactions 24/7 without melting down? It's because it's built on a completely modern, cloud-native foundation. They use Amazon Web Services, AWS, which lets them scale their computer power up or down whenever they need to. This makes them way more agile and efficient than a traditional bank running on a bunch of old physical servers in a basement somewhere.
Okay, so we've got a great user experience, a brilliant partner bank setup, and a powerful tech stack. But if everything is fee-free, how in the world does Chime actually make any money? Let's connect all these pieces to their economic engine.
This right here shows the fundamental difference. Traditional banks make a huge chunk of their money from fees, the exact things Chime got rid of, and from charging interest on loans. Chime's model? It's completely different. Almost all of their revenue comes from something called interchange fees. It's a tiny fee, maybe 1 or 2%, that the merchant, not you, pays every single time you swipe your card.
Now, for an interchange model like this to work, you need two things. First, you need scale, like massive scale. And Chime, yeah, they have it. As of late 2023, they had 9.1 million active members.
Second, you need those members to be really engaged. They can't just open an account and forget about it. They have to be using their card constantly. And Chime's members are incredibly active, making on average 54 transactions a month. Every one of those swipes, every coffee, every grocery run generates a little sliver of revenue.
And when you take those tiny little fees and multiply them by millions of users swiping their cards dozens and dozens of times a month, well, it adds up. In 2022, it added up to over $1.5 billion in revenue. That is the incredible power of this fintech model.
So when you put this all together, what Chime has built is way more than just a company. It's basically a blueprint. It's a replicable pattern for how you can build a modern financial institution completely from scratch.
And this is that blueprint, broken down into 5 key pieces. First, you need a licensed bank as a partner. Second, you get on a major card network so people can actually use the card. Third, you plug into an issuer processor to handle the transactions. Fourth, you build a fantastic fintech app that becomes the user's control panel. And finally, you run the whole shebang on scalable cloud infrastructure. That's the recipe.
And that leaves us with one last really big question. We've just deconstructed this incredibly powerful new model, layer by layer. If this combination of smart partnerships, modern technology, and a focus on the user is the blueprint for the bank of the future, what does that mean for the bank of the past? It's a question that is going to shape the entire future of finance. Thanks for tuning in.